just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good afternoon. Thanks for tuning in. You're watching Ask Speak You on Bloomberg Quint. I'm Navneet Saluja D'Souza.
Good afternoon, Navneet, and good afternoon to all of you. I'm Alex Matthew. Well, is this the right time to invest in equities? Which stock should you choose? And if you bought a stock, what should you do with it? You've hit the right link if you have any of those queries. The experts on this show will help you make a decision. So send in your queries on Twitter, on Facebook, or you can call us on the number on your screen, that's 022-454-04141. And you can also mail us at askpq@bloombergquint.com. Just add the AskPQ hashtag. We'll take as many queries as possible, so do keep them coming in. Our two experts of the day are Aditya Agarwala of Yes Securities and Parthiv Shah of TRACOM Stock Broking. Welcome to the show.
Okay, but before we get to the individual queries, here's a quick look as to what's happening with the markets right now. Well, there was a bit of recovery seen in the Asian indices. In fact, Nikkei had turned positive, but the Shanghai market was still in the red, and we're just about trading flattish around the mark of 10,000 as we speak. If you could just pull up the Nifty constituents, and we'll get to know the contribution which is coming from the stocks today. So some bit of rebound actually seen for the banking space. State Bank of India, ICICI Bank, which were the major laggards last week, have seen a bit of rebound. Yes Bank, which was down 4% on Friday, has seen some bit of recovery coming in today's session. Well, IT is seeing a profit booking. So Infi, Wipro, both of them are trading in the red. And you've also got GAIL and Vedanta, which are seeing some bit of negative ticks today. But overall, the oil marketing companies, they are trading in the red. Remember, the Brent crude prices have crossed the mark of $70 per barrel. So all three of them, IOC, BPCL, HPCL, all three of them are also Nifty constituents, have seen some bit of losses. For the broader markets also, it's turning out to be a mixed session. Pull up the Nifty mid-cap as well as the small-cap index. So nothing majorly happening, actually. Mid-cap is just about up 22%. Small-cap index has seen cuts of almost 44 points. Pull up the advanced decline ratio. You'll get a better picture. Actually, it's in favor of the declines as we speak. So almost 1:2 is the ratio that one is seeing on National Stock Exchange. Just want to highlight a few stocks which are gaining in today's session. Panacea Biotech, right from the word go in the morning, has seen some gains, up 7%. Cadila Healthcare, some bullish note coming in from CLSA, on back of which the counter has seen gains of nearly 4%. Besides that, you also got stocks like Canfin Homes as well as Bata India, which have seen good amount of gains as we speak. Stocks which are not doing too well, Unichem Laboratories, that's seen a major sell-off. That's down nearly 10%. Indian Metals and Ferroalloys, as we call it, IMFA, that's seen cuts of 8%. And HCC is also down about 5%. Well, this is the truncated week. It is also the expiry week. The March series will be expiring on Wednesday this time around, considering Thursday and Friday are market holidays. So the 10,000 mark is becoming very, very crucial for this market. And today also, if you look at the options activity, we've seen some put writing coming back into the 10,000 strike, which is added over 7 lakh shares. Even the 9,900 and the 9,950 put strikes as of now have seen a bit of OI addition. On the call side, obviously, the out-of-the-money call strikes in the likes of 10,200 and the 10,100 have seen some bit of OI addition. But remember, if you go by the premium on both 10,000 call as well as the put strike, it's giving you the range of nearly 9,950 to about 1,050. That's a range of 100 rupees that one can expect at least in the near term, Alex.
Well, Navneet, thanks for that snapshot of the market as it stands right now. Let's jump straight to the the viewer queries that we have. Pulkit Agarwal is the first one to write in to us. He writes in on YouTube. He has 500 shares of Bharat Electronics that he bought at 162 rupees with a long-term view. Pulkit wants to know if he should average at the current prices. Well, Bharat Electronics, a Navratna company, a number of brokerages have apparently spoken favorably about the stock, considering that its largest customer is India, which is the 5th largest spender on defense equipment. Also, the company has a sizable order book. In fact, some brokerages had suggested entering the stock, considering the weakness post the December quarter results, which were a little underwhelming. Pulkit seems to have bought on the downswing. He bought at a time when the stock was around 162, as I mentioned, and the stock has since lost about 13%. Parthiv, I'll come to you. He's asking whether he should average at the current levels, and what's the view? Should he hold on with a long-term view? Parthiv, can you hear me? All right. It appears as if we can't get through to Parthiv. Aditya, I'll come to you. He's asking whether he should average Bharat Electronics at this stage, and he has a long-term view on the stock.
Okay, so stock definitely looks good if I take a look at the monthly chart or the yearly chart. But having said that, markets are in a corrective mode. I expect stock to correct further, close to about 130, 125 zone. So it's a good idea to average lower, close to about 130, 125, not at current levels. But yes, stock still is in an uptrend. Longer term trend is still up. So he should stick on to the stock. Probably look to average around 130, 125. Those are good levels.
Okay, that's the view coming in on Bharat Electronics. Let's move on to our next query for the day, and this one comes from Vasu Badineni, who writes to us on WhatsApp. He's got 310 shares of Bank of Baroda. He's a short-term investor and he wants to know what should he do. Well, he's not actually mentioned his entry price for Bank of Baroda, but let's get a check going in from Aditya on the charts. I don't know the entry price, but on the charts, if somebody's been holding long positions here, what would you advise them to do?
So if you clearly take a look at the bank index today, it has shown some strength. All these previous week Bank Nifty was extremely weak. So this week Bank Nifty is showing some strength, and mostly led by the PSU banks. So I would suggest hold on to Bank of Baroda out here, and one can keep a stop close to about 128 and look for a target of 140 to about 150, because we don't know his entry price. So we'll just stick to targets of 140 to 50, keeping a stop at 128.
All right, that's the view on Bank of Baroda. Let's move to the next query. This one from Ankit Mishra, who writes in on Twitter. He has 100 shares of Mahindra CIE that he bought at 250 rupees. Again, Ankit wants to know if he should average at the current levels. He bought Mahindra CIE perhaps looking to capitalize on the recovery in the automotive space that everyone's talking about. Unfortunately, he seems to have bought at the start of 2018, and the stock has corrected since then. It's down about 17% since then. In fact, the stock is currently just about 10 rupees above the 52-week low. Parthiv, I'll come to you on a view on Mahindra CIE. He hasn't mentioned his time horizon, so you can give us both the short and long-term view on this particular stock. Should he average at this stage?
My sense is that this is a good quality company with great quality management, and especially when we talk about auto ancillaries, I think all the products that they're into, forging, stamping, gears, castings, magnetic products, all of these, I think they're supplying to many of the OEMs. And also, I think all their customer profile, they're excellent. They're supplying to BMWs of the world, Daimlers of the world. So I think their customer profile is also very good. And especially the technology sharing that they have with CIE, I think that is also going to bring a lot of rewards to the company and overall their strategy going ahead in time. So I think Mahindra CIE is a good quality company. Yes, I think the markets have corrected, and most of the mid caps also along with it. As a result of which, I think when he entered, probably that was kind of the peak, near the peak of the markets. But I believe in such quality names, I think no harm chipping more and cost averaging and getting your cost down, so that whenever they start performing in terms of the quarterly results and when the share tends to move up, I think that's the time when cost averaging always tends to help in such good quality management and companies. So definitely you can cost average here and do it in a staggering manner in 2 or 3 further parts.
Okay, so Parthiv suggests hold on to Mahindra CIE. Also, if you want to average at current levels, you can look to do that. 207 is the current market price of the company. We're getting a lot of your live queries. Let's go across to them, and I'm going to take Abhishek Gupta's query first. He writes to us on YouTube. He's asking if this is the right time to invest into stocks like Torrent Power as well as GNFC with a long-term view. Parthiv, I'm going to come back to you. Power companies have not done too much in the recent past, and Torrent Power in particular has seen cuts of nearly over 20% for this year. And GNFC, it's a Gujarat-based company owned by the government of Gujarat, and I believe you track these companies pretty closely. Would you advise somebody to take a fresh investment if they have a long-term perspective?
See, firstly, talking about Torrent Power, I think this is one of the rare companies in the power sector which does not have major issues in terms of its assets and in terms of its balance sheet. It's a strong balance sheet company, very well managed, and I think it's an end-to-end power player wherein they are also involved in things like generation, distribution, transmission. And I think this business model, according to me, I think is very solid. And I think that's why one of the fewer names which has not eroded a lot of shareholder value in the power sector, like many of its peers have done. So I still believe, I think it's a good quality play, and I think they're doing all the right things. And most importantly, the key trigger going ahead would be the increase in the plant load factor of the gas-fired power plants. I think the gas-fired power plants are state of art in terms of technology. It was just the availability of gas which was kind of depriving them of the generating of the cash flows. And now with the Petron LNG terminal in place and with the gas deal in place, I think this company will tend to do well, and the gas-based power assets will tend to generate higher cash flow. So I think we are very bullish on this name, and one should definitely hold on to it. Talking about GNFC, I think we know for the fact that in GNFC, a bulk of its rally took place because of better spreads in TDI. And I think GNFC is one of the rare producers in the country for TDI, which very few competition produces. And I think, unfortunately, I believe that the spreads have come down. And this is the most difficult part about playing or investing in a commodity-centric stock, because I think when the going is good, they can give 3-4 returns. But when the prices tend to come down, it's very important to exit or have a very right entry point. So definitely, I would not suggest buying GNFC at current levels. There are many other specialty chemical plays, names like Aarti Industries, which I find far more attractive and more stable in terms of the business model going ahead.
All right, Abhishek, hope that answers your questions on Torrent Pharma and GNFC. Let's move to another very quick question. Parthiv, I'm coming to you on this one. It's not a very detailed query. It comes in from Kuldeep Katare, who's asking for a view on Yes Bank. He hasn't spoken about an entry price, so I'm assuming that he's talking about entering the stock at the current price. It's one of the stocks that has corrected in the banking space higher. It's up about 4.3% in trade today. What's the view on Yes Bank? Should he get in at this point?
No doubt, I think Yes Bank has done extremely well over the period of years, and I think they are a prominent name in the private sector banking space. But I think the slight worry that some participants have is, despite having a big corporate book in many of the sectors which had a lot of stress, their NPAs were not reflecting any sort of trouble. And something similar we had seen in the past in names like Axis Bank, where in the past, despite having a big corporate book in many stressful sectors, they were not having any major NPA issues. And all of a sudden, these NPAs started popping up. And recently, I think all the RBI data in terms of the divergence that Yes Bank had in terms of its asset quality makes me slightly nervous on giving a longer term view from here. So I think in the private banking space, we are far more comfortable with a name like RBL Bank. Mr. Ahuja is doing all the right things. He's focusing on the right verticals. The bank has excellent creditworthiness in terms of how their lending practices are, even into some sectors where the yields are high, but the risk is also higher. But he's maintained the asset quality really well. The capital adequacy is also extremely good. And this is a bank which from the current base can grow by 25-30% in terms of advances. So such are the type of banks which I feel over the next 3-5 years will outperform the Yes Banks of the world.
Okay, that's the view coming in there. Let's take our next query from Shrikar D, who writes to us on YouTube. He's bought shares of Elecon Engineering, I guess, at a price of 103. He's asking what can the stock do in the near term? Can we pull up the current price of Elecon? Okay, it's corrected very sharply from Shrikar's buy price of 103. Pull up the YTD chart and see whether the majority of the correction may have come in this year for this counter. It's down nearly 32%, Aditya. Do you think it would be wise to just exit, or he should look to hold on?
Definitely, I would advise exiting from the stock because, as you clearly pointed out, stock has witnessed sharp correction. And I'm looking at a further correction in the stock. Probably it can head to levels of 64 to about 63, which is a sharp correction from current levels as well, about 10%. So definitely one should exit from the stock.
All right. Elecon, clear exit is the call coming in. The next query is a live one from Facebook. Saurav Kumar has written in on Facebook, and he's asking for a call between two life insurance players, HDFC Life and SBI Life. He's asking which one is a better bet with a 1-year view. I'm not sure why he's taking a 1-year call. because most people that we've spoken to about the insurance space are talking about a longer-term horizon. I'll come to you, Parthiv. What's the view between these two counters, and would you suggest going a longer term than 1 year?
Yes, you very rightly mentioned. I think when one wants to invest in such a sector, which is a huge untapped opportunity, it's not going to happen all in 1 year. And I think such quality companies have to be invested over the next 5, 7, 10 years. And that's when they compound your wealth and create a lot of wealth. So I think out of the two names, both the companies are doing reasonably well. And HDFC Life is slightly more expensive in terms of the premium valuation it carries over SBI Life. I still prefer HDFC Life. The only reason being that the company has a very, very strong brand recall. It does enjoy a lot of bank assurance channels that it has partnered with, and especially likes of HDFC Bank as well. And also, I think they are doing extremely well in terms of their return ratios and all the fundamental parameters that one looks into while investing into a life insurance company. And I think especially their focus, which was ahead of many of their peers like ICICI and SBI in the protection business, is yielding very good results. And the protection gap that India has vis-a-vis many countries like China, I think gives us a lot more visibility over the longer term and the growth horizon these companies have. So I think I would definitely suggest a 1 year beyond type of a horizon for holding on to such quality stocks, and HDFC Life would be the preferred bet over the next 3, 5, 10 years.
So Parthiv prefers HDFC Life in the insurance space. And next query, Alex, is quite interesting. On Facebook, Raveen K. Pai says he's bought 4 shares of TCS at 2025 and 20 shares of Vedanta at 180. He's also saying, this is my first stock buy at the age of 20, and what would you recommend? First of all, Raveen, I want to congratulate you to have the gumption to enter into the equity markets at the age of 20. What were you doing when you were 20,
I was worrying
Alex?
about how I should, finance my glucose biscuits at the end of the month, because I was on
we were running out
buttons.
of money by the end of the month and asking our parents to send some more money. But nevertheless, Aditya, I'm going to come to you. It's a very good entry level. He's making money on both the stocks, Vedanta as well as TCS. Do you think it's the right time for him to book profits, considering markets are turning volatile now?
Okay, so I'll first talk on TCS. If you clearly look at the IT stocks, they've done well, and recently TCS witnessed a correction post that block deal. It's come to a very good level, and he's bought at a very good price. So I would recommend holding on to TCS at current levels, and you can see a target of 3,000 and higher in TCS. So clearly it's a hold. As far as Vedanta is concerned, there are some concerns as far as metal stocks I talk of. I'm not too confident of holding on to Vedanta in current levels. One should look at exiting from Vedanta and buy at lower levels.
All right, that's a call coming in. Let's hope our young investor has the answer that he's looking for. The next query is from Dhaval Bayani on Facebook, and he's asking for a call in the automotive space between Tata Motors and M&M. He's wondering which is the better bet with a long-term view. Parthiv, I'll come to you. We've spoken about the fact that Tata Motors is one of the cheapest blue chip names right now on the benchmarks. M&M, of course, is a company that will benefit from the rural play that is expected to come in. Which of the two would you select as a long-term bet?
This is a tough one, because I think both the companies have their own niches, and it's not fair to compare their current business models, because M&M, as you very rightly mentioned, is a more of a pure domestic play and more of a rural play, thanks to its excellent portfolio in the tractor segment. Vis-a-vis Tata Motors is all about JLR. Frankly, I think ever since JLR has been underperforming, this stock has been underperforming, and whenever JLR ramps up in terms of its new launches and the pickup takes place, I think we'll see Tata Motors again firing on all cylinders. But at this current juncture, the only reason why I'm slightly more biased toward M&M is, I think in this company, when one invests into, we are currently able to catch the theme of rural, and I think this is the theme that the government is constantly focusing on. We have seen fantastic numbers in terms of the tractor sales, and I think even from a very high base, they have shown fantastic performance. Tractors come with very high margins, and I think the management is also quite upbeat in terms of the monsoon is normal. The volume growth that they're targeting is looking quite good. Plus, I think beyond tractors, they're doing a lot of innovative things, which if materializes can create a lot of shareholder value. And also M&M as a holding company, because it's a parent company which has a lot of other group companies, some listed, some unlisted. So there's a lot of hidden value in this company, and as and when in future, if the management plans to to unlock this value, I think that can also create a substantial value for the shareholders. So for the longer horizon at current levels valuations, I think M&M, I'm more biased on it as compared to Tata Motors.
I think one of the spaces that M&M is trying to work on is the agri-product space, seeds and other agri-products. So that's interesting.
And Tata Motors actually has not been performing that well, and it's one of the cheapest stock that is available among the Nifty constituents. Let's move on and take Ankit Shastri's query that he writes to us on Twitter. He's bought shares of Capacite Infra at a price of 410 with a long-term view, and shares of CESC at 1030 with a 3-month view. So he's asking what to do. Let me address CESC first. He's bought at 1030 and the current price is 908, and Aditya, he has a 3-month view here. What would you advise him to do?
Okay, so CSC has been witnessing corrections for some time. From 1200, stock has corrected about 900 odd levels. Just a bounce back that we're witnessing in trade today in CSC. Charts still look bearish. We've seen a breakdown from 50-day moving average to 100-day moving average. So there is a cross down between 50-day 100 moving average and 100. So these are bearish signs. Not too bullish on CSC. I would recommend exiting from the stock.
Okay, and the other queries in Capacite. I'll take this to Parthiv. Parthiv, what's the advice? He's bought at 400 and trend, and there's been a sharp correction in this counter which has come about. Would you suggest him to hold on, considering he's got a long-term view here?
Yes, I would definitely suggest to hold on, and if possible also cost average here, because the stock has corrected massively from its all-time highs, and yet I think in terms of the performance we still believe that this is a fantastic play. If one wants to play a proxy for the real estate segment, their execution is one of the best in the industry, and recently we are seeing all big names participating in the real estate sector, and Capacit'd, I think in terms of its business model as an EPC contractor, I think is doing great in terms of earning very respectable margins, has a fantastic clientele, and they recently also won a new order over 240 crores, and the order book is also quite respectable in terms of giving us a lot of visibility for further execution going ahead. So I think Capacity Infra, in my view, I think at current levels it's a very attractive buy, and definitely I would suggest to cost average and hold on to this stock for the next 2 to 3 years to create good value.
All right. Those are the two stocks that were spoken about right now. Let's move on to another query, this one from Sanjeev Agarwal on YouTube. Sanjeev has bought 9,000 shares of Federal Bank at 110 with a long-term view. He wants to know whether he should hold, sell or average at the current price, which as it stands is about 90.7. I'm going to go to Aditya for this, because at the current levels, where do you see it going? Should he average at this point? Do you see a further downside for this?
Okay, it's a good stock within the banking space. Though stock has witnessed some correction in the recent times, but right now it's taken support at 90 around 90 levels. So these are good levels. He can go ahead and average the stock close to about 90. Right now it's trading at 90.7. I'm looking at a target of 110 and higher in the stock. So definitely makes an average at current levels.
Okay, that's the view on Federal Bank. Let's take our next query. This one comes on YouTube. Saurav Pathak writes to us, and he's bought 1,500 shares of Rallis India, I guess at a price of 253 or thereabouts with a long-term view. He's asking what to do. Parthiv, I'll come to you. If you track Rallis India, what would you advise? Should one hold on if they have a long-term view here?
Yes, I do believe to hang on with a company like Rallis India, which is a Tata Group company. And I think the company has done extremely well in terms of clearing out all its past inventory-related issues, as a result of which the company is not showing in good performance in their quarterly results. But going ahead, we are quite upbeat in terms of the prospects, especially again, rural-themed stock, having very good market share, doing all the right things. And also they are spreading their brand awareness with lots of farmer community. And also they are into the genetically modified seeds via the acquisition that they did, which is also ramping up quite well. They have been launching good new products in the herbicides, fungicides segment. So I think in all, I believe that such quality companies with a long horizon will do very well for investors. So definitely it's a good entry point, and playing this theme, I find it very comforting for the next 3 to 5 years.
All right, Parthiv, another quick question for you. Akash Kumar, we've already spoken about Tata Motors. Akash is asking about the DVR. He bought 9,000 shares at 270 with a long-term view. The DVR is currently at 184. He's asking what he should do at this stage. What would you advise him to do?
See, historically, I've always seen that whenever the Tata Motors common stock, I think that tends to underperform. The delta in terms of the valuation gap between the discount gap between the DVR and the common stock always tends to increase. And currently, if you see, that is at an kind of an all-time high in terms of the percentage spread between the two. But I think, as I mentioned, that Tata Motors is a case in point in terms of how JLR does. If at all there is any turnaround in terms of JLR's performance, then this is a stock which will be loved by many, and many will jump the gun and buy it. So I think, no doubt the valuations are very tempting. It's one of the cheapest stocks in the Nifty. But unfortunately, because of the JLR picture not panning out the way it was envisaged, this stock is underperforming. But yes, I think if one is patient and can hold on for next 2 to 3 years, I do have conviction in the management ability of this company, and they are having a pipeline of new launches. And whenever they've done that in the past, the volume growth has come, the margin growth has come. They're also making good inroads in the EV segment, tying up with companies like BlackBerry for innovation in the digital cockpit. So I do believe that one should hang on to such companies for the next 2 to 3 years at current valuations. And the DVR also, if it has corrected from the buy price, I think should be cost average, and then one should wait on to it.
Okay, that's the view on Tata Motors DVR. I'm just going to squeeze in one last query, which has come on WhatsApp. Saurabh Joshi has written a message to us. He's bought 700 shares of Avanti Feeds at a price of 2448. He does have a long-term view, and I'm sure the price has corrected from Saurabh's buy price. But Aditya, I'll come to you for this. What are the long-term charts suggesting if somebody is bought around the levels of 2450? Should they be looking to hold on?
Definitely. Today we saw a free trade in Avanti Feeds. I'm seeing a low of 1700 on the stock, close to about 1740. I don't know what happened, but there was a free trade. But if I take a look at the longer term charts, the monthly chart and the yearly chart, stock looks good. Stock has witnessed corrections from 3000 odd levels. So these are good levels to get into the stock, because the longer term charts still look bullish, and definitely it's a good stock to hold on to a portfolio.
Okay, Saurabh, you can look to hold on to Avanti Feeds. At least that's what the long-term charts are suggesting, according to Aditya. Well, on that note, I'd like to thank both our guests. Thank you very much, Aditya and Parthiv, for helping our viewers with their queries. And that's all that we have on this edition of Ask BQ.
But do remember, as always, we're just a tweet, post or call away. So do keep your queries coming in. We'll promise to address as many of them as possible through our shows. You can log on to the website bloombergquint.com and search for the hashtag AskBQ and get answers to all the queries that were discussed on this show. Power Lunch is up next, so do keep watching. This is Bloomberg Quint.